So we all know that we are still streaming, binge watching a lot of things on our televisions by way of streaming channels. Well, today we're going to compare Apple to Amazon. If you want to know why I picked those two out of all of the other streaming channels and which one I think is the best one, you sit right there. Hi everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Always love bringing these videos to your attention. This is a video that a subscriber asked me to do, so I think that this was a good time to do it. Before we get started, if you're brand new to the channel, please hit the subscribe button so that you can support the channel and hit the bell icon so that you'll be alerted when new information like this or new videos like this come out. Don't forget to hit the like button. Hit the like button. And you know something, let us help us to grow the channel. Let's get these videos out to everybody else out there so they can see what we're doing here at VectorVest. So today we're going to get right hot and heavy into it. Today we're going to look at two stocks in particular. We're going to look at Amazon and we're going to look at Apple. Now, there's a lot of streaming services that are out there. There's a reason why I picked these two. We're going to get into that in a second. Now, I've got a couple of stories here. One of them comes out from the street. Was done today. Amazon stock. This is how subscriptions matter. Now, keep in thinking that Netflix, that is strictly a subscriber-based service. And it just recently missed earnings, but there's a little different story behind what Netflix does and what Amazon and what Apple do. So Amazon on the first front, Amazon subscriptions do not amount to much revenue, probably even less so to profits. But the success of the company and the upside to Amazon stock may depend greatly on this business. Now, it talks about, for the most part, what Amazon does. Amazon has 200 million Prime accounts, meaning that Amazon's Prime Video has become one of the most widely available streaming services in the world. That's a lot of people. Now, take that into consideration. These are Prime Videos or these are Prime subscribers. Doesn't mean that they all have Prime Video. They have access to it, but doesn't mean that they all use it. So when you look at Amazon Prime, that's the amount of subscribers that they have to it. The key thing about that is now that streaming service is open up to a wide market of people. Now, Amazon doesn't do just videos. Of course, you can buy a lot of stuff through Amazon. Anything you want, anything in the world you want. Ask my wife. She knows she can get it from Amazon. So that is the crux of their business. The Prime side or the Prime Video side of it is just another side of it, which is why subscriptions don't matter as much for the Prime Video side than it does for the Prime overall Amazon Prime. Now, take that same story and add it to Apple. Apple is a niche market for Apple products, whether it's the Mac, whether it's the iPad, the phone, all of that stuff. That's where the crux of their business is. And then the video side of it is just another piece of it. So when I look at that, these two companies have a strong base on what they do already. The video or the streaming side is just in addition to, or sort of like the icing on the cake. So that's why I picked these two stocks out of all of the streaming services that are out here. Now, I went to look at a website called Statista to get some statistics behind both Amazon and Apple. So when I look at here, the number of Amazon Prime members worldwide, and this is 2 years ago, 200 million subscribers to Amazon Prime. That's a lot of people. And if you open up the Prime Video to them, you got more exposure across the way. Now, you notice that it doesn't have any specific number on the amount of video or streaming people. Interesting, right? So let's take the same website and let's take it over to the Apple side. Now, the estimated number of Apple TV users in the United States from 2019 and 2020 rose from 33.6 million to 40 million in 2020. And I'm assuming that with the advent of COVID, that rose a little bit. Now, keep in mind as well, both of these companies from an earnings perspective consistently make money. So it's not about the subscribers to the video services because, again, they are the icing icing on the cake, but it's what they do in the background that grows their business. Now, when I look at these streaming services, I'm not going to analyze which service is the best that gives you the best value. This is all about where your money is best represented to help you to make money in the market as an investor in the streaming services. So that's all that I have as far as news on it and some statistics about it. I'm going to present 3 cases for you why I like the 2 stocks, and then the last thing is I'm going to tell you which one I think is the better of the 2. Let's get into the VectorVest software. Where's my mouse? There it is. Let's get into the VectorVest software real quick. And I've got a watch list of all of these stocks. Now, the cool thing about the VectorVest watch list is when I put these stocks into a watch list, they're sorted by our master indicator, VST. So the stocks that got the best combination of value, safety, and timing will migrate to the top of the list. Now, I've got the other companies, the other mainstream, high streaming companies in here as well. We have Apple, Amazon, Netflix, strictly all subscriber base. No other business except for Netflix doing what they do. Comcast, I have Comcast here because that represents Peacock. That's another streaming service. I have Comcast and I have Viacom. Viacom is specifically for the Paramount streaming service. Disney, you know what Disney is, so that's all about, but they encompass not only the Disney streaming, but Hulu as well as ESPN. And AT&T represents HBO. HBO Max is making a run right now, and so these are the main streaming services. I wanted you to see them all. Let's concentrate now on Apple and on Amazon. Notice that those 2 stocks are at the top of my list of the 7 stocks that we're looking at. That's point number 1, all right? That's the reason why I'm comparing these 2. From a fundamental analysis perspective, the stocks, relative value, the upside potential. Both of these stocks should outperform the market at a point of at least 40, almost 50% on a 1 to 3 year average. Relative safety, these stocks are safe. Now, keep in mind that these indicators that I'm looking at in the VectorVest system are all cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. But the higher above 1 it is, the better it is in that category. So both of these stocks are safe stocks. Currently, from a technical standpoint, both of these stocks are in uptrends. Both of these stocks are buy recommendations. Now, I'm going to take the power of this list, and I'm going to show you why I chose these 2 stocks. Let's start off with VST. So these are already sorted in VST. What's at the top of the list? Apple. Let's look at the safest stocks in the list. Sorted by relative safety. What's at the top of the list? Apple. Which stocks are moving up the fastest by way of relative timing? We'll sort by that. What's at the top of the list? Apple. All right, so let's look at the other side of it. Which stock has the biggest upside potential as an investor in these stocks? We'll sort by relative value. What's at the top of the list? Amazon. Well, what's the engine that drives the stock's price higher? Earnings. Let's see which stock has the highest earnings growth rate. Click on that. Amazon. And now, which one is the best value for the stock? Let's sort by value. We give an intrinsic value on every stock. Amazon. All right, so now we saw 3 categories for Apple, where it was at the top of the list, 3 categories for Amazon, where it was at the top of the list. Notice that those 2 stocks were the stocks that were at the top of the list for all 6 of those categories. Interesting, right? All right, so now case number 2. Let's look at their graphs. Let's go look at the graphs of Apple and of Amazon. Amazon and Apple. Here's Amazon, here's Apple. Amazon, Apple, right click, view the stock graph. All right, let's go take a look at them. Looking at these graphs, man, 3-month graph, bottom left, top right. Look at that. Amazon coming off a level of support, bouncing. 3 and 8 exponential moving average just hit, follow through the day. I've got a profit target sitting at this high of about 37.73. That's not half bad. Look at the relative timing, stocks in an uptrend. Look at the earnings and look at the earnings growth rate. You can't go half bad with that, right? Well, that's on Amazon. Let's go look at Apple. Good gravy. Look at Apple. Bottom left, top right, coming off a level of support. Notice on the pullback, the 3 and the 8 still stayed in there. And look at that stock still rising. Got a profit target right now sitting at about $150. Both of these stocks have the potential to break through and go higher. All right, that's why I like those two stocks. But I want to give some love to the other stocks as well. Let's look at all of the graphs now. Stock graph, there's Amazon again. Now, Netflix, missed earnings, bad, boom, falling down, not feeling it right now. We already looked at Apple. Now, CMCSA, look at that, sitting in a channel overall, and that's Comcast. Nice up day today, 3 and 8 just crossed, but sitting in a channel. Next one, wow, Viacom, pulling off of that high, moving sideways. The 3 and 8 are negative. Which one? Disney. Now, Disney went into the streaming because the parks got closed down because of COVID, so they were starting to pivot. And even with the pivot, they're having a hard time with it. Right now, the 3 and 8 are bearish. And let's go to the next one. Wow, AT&T, good gravy. Now, this does have another business. This is not just about streaming. They have the phone business, and man, it's just not feeling it right now. Now, remember, these are stocks in the streaming industry that I'm trying to give you some heads or tails on where you would want to put your money as an investor. I've got one last thing to do. Let's see what the performance of Amazon and Apple are compared to the S&P 500 over the last 3 months and the last 1 year. I'm going to go to a performance graph. Click on graphs. This is a performance graph of just these 3 stocks. There's the S&P 500, which is represented by this orange line. We have Apple, which is represented by this purple line, and Amazon, which is represented by this brownish line. Over the last year, long-term as an investor, where would you have your money in regards to the streaming services? By far, Apple has outperformed the S&P 500 and Amazon over the last year. Well, shorter term, swing trade. Let's take the same graph and put it on a 3-month graph. What does it look like? Wow. How about now? Amazon is outperforming the S&P 500, but Apple is still right now outperforming Amazon. Now, over the last 3 months, though, there's been a topsy-turvy move back and forth between the S&P, Amazon, and Apple. Look at Apple feeling some effects to the downside right there during the first part of the 3 months. But as of right now, if I were putting my money into any one of these stocks right now, my money would be more so on the Apple side, not cider, but side, outperforming both Amazon and the S&P 500. So with that, folks, I want to say thank you for joining me for this video. Hopefully this puts some insight into the streaming world and where your money as an investor should best be looked at right now. I'm thinking that Apple is the better play. Amazon is not a bad play. Both of them currently are outperforming the S&P 500, but we looked at the analysis by the fundamentals. We looked at their graphs to see what they look like, and then we did the performance graph, 3 different ways to get to the final result that in the streaming world, Apple may be the way to go. So folks, this video is over, and until the next time, see ya.